If you have a traditional job, you spend the first 4 to 5 months of every year working entirely for the government. Every dollar you earn from New Year's Day through mid-May goes straight to covering your taxes. This creates a strange paradox. Smart, highly educated doctors and accountants pull in excellent salaries, yet they often struggle with debt for decades, while wealthy individuals seem to multiply their assets without the daily grind. The root of this gap starts early. Our schools are designed to teach scholastic and professional skills, but they completely bypass financial literacy. We are trained to study hard and get good grades, but we are never taught how money actually works. We learn how to trade our time for a paycheck, but we completely miss out on the mechanics of making that money work independently for us. Hardworking people are often stuck in a cycle where their effort doesn't match their progress, simply because the rulebook they were given in school wasn't designed for their financial success. We're often told that taxes are a way to balance the scales, taking from the rich to provide for everyone else. It's an appealing Robin Hood-style narrative. This 1913 document shows the 16th Amendment, making income tax permanent, sold to the masses as a penalty only for the ultra-rich. But as spending expanded rapidly, the tax brackets expanded outward, trickling straight down to the middle-class voters who supported it. The elite, however, didn't just sit still and accept the new levies. They hired attorneys and accountants, pooled their resources, and utilized existing legal frameworks to bypass the system entirely. A policy originally sold as a tax on the elite eventually became the primary financial burden for the uneducated middle class. The primary mechanism the wealthy use to protect their money is something you hear about every day: the corporation. Most people hear that word and picture a sprawling factory or a massive glass skyscraper filled with thousands of employees. But a personal corporation is really just a manila folder filled with legal documents sitting in a state agency's filing cabinet. The concept gained popularity back in the era of sailing ships. Wealthy investors wanted to fund expeditions to the New World, but they didn't want to lose everything if a ship sank. So they created a legal entity to fund the voyage. If the ship went down, the investors only lost the specific funds tied to that one voyage, leaving their personal wealth untouched. Today, that same legal force field is used to shield income from both external liability and heavy taxation. Because of this structure, we now live in a society running on two completely separate financial operating systems. This diagram illustrates Rulebook 1, used by the average employee. You earn a salary, the government immediately takes its cut through withholding taxes, and you have to survive on the fraction that's left over. Now look at Rulebook 2, the corporate model. The entity earns income, spends everything it legally can on legitimate business expenses, using pre-tax dollars, and is then taxed only on the small profit left at the very end. When you compare these two formulas side by side, the math becomes clear. Paying for cars, health insurance, or travel as corporate expenses before the taxman arrives drastically increases the capital you retain. People at the top don't necessarily generate larger gross incomes than a successful doctor or engineer. They just filter their cash through a highly efficient mechanical formula. But you can't just incorporate and expect to get rich. To successfully operate this shield, you need a foundation of what's called financial IQ. This intelligence requires 4 specific pillars: accounting, which is your ability to read and interpret numbers; investing, the science of using money to make more money; understanding markets, the basic forces of supply and demand; and finally, the law, knowing the exact rules and tax regulations. A corporate structure backed by these 4 technical skills creates a foundation for rapid and legally protected growth. The battle for wealth has raged for centuries, but it isn't fought with weapons. It's waged in the legislature, through the tax code, and the uninformed side always loses. Without financial aptitude, the average person quietly accepts the heavy deductions from their paycheck, usually out of a basic fear of the government and a lack of alternatives. Wealth is measured by the ability to keep and grow capital across generations, regardless of the starting salary. The mind is the primary asset for building wealth, making the choice to pursue financial education a daily requirement. That means stepping off the traditional path. You can spend your life climbing the corporate ladder, trading your hours for a supposedly secure job, only to be heavily taxed at every rung. Or you can master your financial IQ, establish a legal shield, and finally force your money to start working for you.